Emmanuel, thank you so much for joining us. Of course,
Thank you
those
for having
lower
me.
yields globally is just one of the news items that we really have to cover here, because incidentally, there are some that are suggesting that a new form of QE could manifest here to even drive yields further down. But let me get your take first of all on the scenarios and how they impact Nigeria, starting with oil. And obviously, we know in the past there's always been a big issue. Many will say as the oil price goes, so the Nigerian markets go. But if you take a look at the budget, the government has moved somewhat away from oil being its major revenue source, even though it continues to be the key export earner for the country. But overall, would you say that the sensitivity of Nigeria to oil is less than, say, it was 4 years ago?
I wouldn't say that.
You think it's still
I think the
same
government,
story?
70% of government revenue base is still tied on
It's
oil
actually lower
revenue.
now. It used to be up to 70, but now I think it's closer to 50, but still significant.
Well, okay, so like you mentioned, oil is still a mainstream to government revenue, and it's hugely the activities of, government revenue is still tied to global oil market movements. And that is why we can see that there's been a little bit pressure on the Naira in the last couple of weeks.
Yeah.
With Brent trading presently within $50 per barrel, lower than the budget benchmark price, we could see that the monetary authorities would be watching at these activities as COVID-19 impacts the global oil market. We can also see that globally markets are in red, from the equities globally and even back home in the NSC. Going forward, the extent to which COVID-19 is impacts on the economy will depend on how much the global economy, especially with China, how much they can hold down its spread. While WHO is yet to officially declare it a pandemic, we know it has basically touched almost all sectors of the continent globally. So it's a huge concern worldwide, and I think oil prices will continue to react to incentives around how much the World Health Organization holds down COVID-19, and possibly if there's going to be a production rate cut in the next coming weeks.
But when I speak to the sensitivity of the Nigerian economy and the markets to oil, the first point obviously has to be the stability of the currency. Now, we've seen a trend where the central bank, especially in February, has really had to deploy some of its gunpowder, if you like, to manage the exchange rate, by supplying the investor and export window. Do you get the sense that this is the inevitable, is that we'll see a depreciation of the currency if oil still remains below that budget benchmark?
At the last bankers committee meeting, which the governor chaired, we understand he did mention that we weren't going to see a devaluation of the currency. I think a whole lot would depend on how much monetary authorities try to keep a balance between the inflationary pressures and, well, the global oil prices is beyond their reach. That would depend on external factors. However, I think the Apex Bank will continue to supply the I&E windows and see how much they can support the local currency. But
it comes at a cost, obviously, because of the reserves.
Yes, that they have been defending the local currency in the last 3 to 4 years. It's not a floating currency. It's still a managed float currency. I think what the Apex Bank is looking at is buying a little bit of time, waiting to see how much energy prices will recover, and trying to see also when Dangote Industries will come on stream and see how that could ameliorate and support exports and reduce import of petroleum products, which accounts for nearly 20-35% of our currency exposures.
But a quick view on fixed income yields, especially this month, as we know, there's going to be another MPC meeting. Overall, what are your expectations? How do you see yields evolving this month?
Well, the policy in place limiting both corporates and the pension funds from accessing OMO is a huge one. That policy is still in place. Also, the banks have technically been restrained also from accessing OMO. The implication is this: the Apex Bank is looking at holding OMO rates at the present levels and ensuring that there is still an instrument that can incentivize FPI capital inflows. You know, before now we used to, like I mentioned offline, we used to have 3 or 4 products that incentivize capital inflows, from equities to bonds to NTBs to OMO. Now we are left with OMO capital inflows. So it's a huge question how much of these capital flows we are seeing compared to a year ago.
Right. Well, Emmanuel, thank you so much for your insights. Clearly, it should be an interesting month. Emmanuel Odiaka is the Managing Director and CEO at ECOB Capital.